Yeah, hello everybody. Welcome back to the channel. We go on with another exercise case on value tax. It's now exercise case 25, part 62 of our small lecture. Who knows how long it will become? Yeah, just take yourself some time and have a look on this case. We have D, that's the owner of an online shop at Düsseldorf in Germany. D sends the purchased goods to his customers by mail, so by DHL or UPS or GPS or however. And D is not a small entrepreneur, so has regular entrepreneurial status. He has customers from all over Europe and all thresholds, especially the threshold under paragraph 3C USDG, the delivery threshold, have already been exceeded. D tells you that he has got the following orders and wants you to know, not you to know, but wants to know your correct and reasoned opinion about how these transactions should be treated under VAT law. First, a customer from Spain orders a book for the price of €12. Customer from Switzerland orders a DVD player for €38. And a customer from Spain ordered an e-bike for €2,000 and gave a Spanish VAT ID number because he is an entrepreneur and buys that e-bike for his enterprise. Well, so, probably it's now a good idea to freeze the screen, press the stop button, take a sheet of paper, take a brain, probably yours, try to conceive an own solution, and later press the button again and try to compare your solution with mine. Oh, okay, so take a small break, and I hope you see me back soon. So, now, sorry, here's my solution attempt. We do it again, event after event. Naturally, you have already learned that. So, who has contract with whom in event number one? We have D from Düsseldorf as the supplier. We have a customer in Spain, and we have a delivery where the good goes from Germany to Spain by mail. So it crosses an EU internal border. That means we need to apply the rules on cross-border deliveries in the EU. And if there were three steps. First question, customer is an entrepreneur or not? If customer is an entrepreneur or has the status of an entrepreneur because he has got a VAT ID number for other reasons, then that would mean that our case should be treated as inter-community delivery and inter-community acquisition on the other side. However, that's not the case. Customer is not an entrepreneur. So step 2 or step 3 must apply. Step 2 would be the deliverer, the supplier, seller, or however you call him, sends that good to the customer into another EU state. In that case, he would become taxable in the country of destination. And indeed, that seems to be the case here because we have exactly that constellation. So seller sends the good to private customer and seller has exceeded the delivery threshold. So the rules on distance selling apply. So the solution must be as follows. Taxability will be in Spain of the seller. How can we give reasons for that or proofs? Number one has to be tested. It's a delivery. Yes, a book is sold. The place of delivery should be determined now under paragraph 3C, subparagraph 1 or section 1, however you call it. And as this is a relatively complicated rule, we should have a look on it. Okay, here we have it again. As place of delivery of an inter-community distance sale is regarded the place where the good is to be found at the end of the transport to the acquirer. That's nice. But now we need to know what an inter-community distance sale is, and that is now defined exactly in the second sentence. An inter-community distance sale is the delivery of a good which is by the deliverer or on his behalf transported to the acquirer from the territory of one member state into the territory of another member state, blah, 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 including a delivery in whose performance the deliverer is indirectly involved. So to sum it up, an intra-community distance sale is given if the deliverer makes the transport, sends or brings the good to the other state, to the customer, and if the customer doesn't come to fetch it home. It would be sufficient if the deliverer is indirectly involved into the transport. So if the deliverer in the name of the customer orders the transport, that would be sufficient as an involvement. Okay. Now, the acquirer in the sense of sentence 2, so the guy who buys it, must be an acquirer who is described in 3A5 sentence 1, that's a private person, or a person named in 1A subparagraph 3, number 1, that's the owner, this one of the so-called half entrepreneurs. So it's either a genuinely private person or an entrepreneur or a juridical person which is still for acquisition tax purposes treated as a private person. To sum it up, what they demand here is the owner, the buyer must have the status of a private person. Well, okay, so that means exactly what we supposed. The place of delivery is here where the transport of the good ends. That means in Spain. Okay, so we can stick to that and go on. So what comes out is taxable is that delivery not in Germany but in Spain. So tax exemption is presumably not given because books are usually not exempt. The tax base will be the net amount that follows from the analogy or the parallel rule to paragraph 10 in the German Tax Act. The Spaniards will have a similar one. So that will be the gross amount of €12 minus the Spanish VAT for a book. And the tax rate and the tax are determined according to Spanish rules, according to the Spanish tax rate for books. All the formal rest is also according to Spanish law. And well, the input tax claims if our shop owner D paid some input tax for buying the book before he resold it via his online shop, then the input tax for this book can still be deducted in spite of the fact that he has to pay no output tax. That follows already from the basic logic, because input tax is only denied if you do something which is tax-free, so tax exempt, but not if you do something which is not taxable at all. So that simplifies life. Our next step, he sent something to Basel, a DVD player. That's again the relation Düsseldorf. Something goes to a Swiss customer. The good goes from Germany to Switzerland. It crosses a border of a third country, so it's evidently an export to a third country. So although this is a chapter on intra-EU transactions, naturally you have to always be aware that reality doesn't play always according to the rules, and that not every case contains just the problem which you discussed yesterday in class or so. So to remind you of that and keep the rules and your knowledge about exports alive, we have this small transaction within our case here. So taxability is the first question. And to test this one number 1 again, it's a delivery 3.1. The DVD is a tangible good, and the transfer of position like an owner occurs here. So a sale. Place of delivery is where the movement of the good begins. Paragraph 3c does not apply, because 3c on distance selling is only if you sell something into another EU state, and that's not the case here. You sell it from Germany to Switzerland, so no special rule on that. So basic rule applies, or general rule 3.6. The whole maneuver is done by an entrepreneur within his enterprise and for consideration, so it's taxable under 1.1 number 1. We have to ask if there is a tax exemption, and you know, for experts there usually is one. So let's have a look to paragraph 6. And you remember probably that in paragraph 6 we have different numbers, and here not all the numbers need to be fulfilled, but only one of the numbers. So we have to determine if it's 6.1 number 1 or number 2. That depends on who transports the good from here to there. And if it's the entrepreneur, it's number 1. However, you probably don't remember. So it would be a good idea to have a glance again at the legal source to be sure that we are right here. So here it is, 6.1. The exportation of goods is defined as a delivery of a good is deemed to be an exportation, blah, blah, if that delivery, or if during that delivery the entrepreneur or somebody acting for him naturally dispatches the good of delivery into the third country, or number 2, if the customer does this, or number 3, not relevant here, something with free ports and free zones and things like that. So indeed it was 6.1 number 1. By the way, you remember probably if it was a case then when the customer carries the good home, then an exemption is only granted if that customer is a foreign customer. That would be defined in 6.2. However, C6.1 number 1 explicitly does not ask for that. So if the entrepreneur sends a good to a third country, it's always tax-free. And interesting might also be 6.4, that the exemption must be proven by the entrepreneur, and that the fiscal ministry can set up rules how that proof has to be given. Okay, so we know that this transaction here is an export now. We also have seen that the export must be proven by sufficient proofs given by the seller, so it's now tax-free as an export, and that can be seen in paragraph 4 number 1 letter A. You remember paragraph 6 says what is an export. Paragraph 4 says if it is an export, then it's tax-free. So we have cited both of these rules, so we are perfect. Tax base is the net amount. That's here 38 euro, because when the good crosses the border, probably the customer will have to pay importation VAT in Switzerland. There will be no Swiss VAT contained in the price. And yeah, so that's it. It's the net amount. Naturally, if you do an export, you still keep the input tax claim for the raw material or the acquisition of that good by yourself in each. So 15.1 number 1 usually gives you an input tax refund claim, and 15.3 number 1 says if you used goods for a tax-free exportation or tax-free intercommunity delivery, you keep, in spite of the exemption, that right to deduct the income tax. So nothing special there, but you should make a remark concerning this input tax peculiarity. Well, now third transaction, that's now from Düsseldorf. We have something sent to Spain. It's a bicycle, an e-bike, and it goes from Germany to Spain, so it crosses an EU border, and the customer has a VAT identification number. So it's evidently step number 1 of our 3 steps testing scheme for the internal market. That means we have to apply the rules of intra-community delivery for the seller and intra-community acquisition for the buyer. We are evidently here primarily asked for the treatment of the deliverer D from Düsseldorf because that's the hero in our case. So let's begin with him. Taxability. To test is number one, we have a delivery because an e-bike is a tangible good. The place of delivery is 3.6 because 3C, that distance selling rule only applies if the customer is a private person without a VAT identification number. However, the customer is not a private person, so that's it. So 3C does not apply. The basic rule of 3.6 remains valid. So it's taxable in Germany. Tax exemption, yes, there might be the inter-community delivery rule, and we should remind ourselves a bit of its contents. So let's have a look. Okay, here we have it. Intra-community delivery of goods, as mentioned mentioned in 4, number 1, letter B, requires that the following conditions are fulfilled. Number 1, the entrepreneur or the customer, so someone, has transported the good into the rest of the customs territory of the EU. So good goes from the inland to another member state. The customer is either an entrepreneur who acts as such and has acquired the good for his enterprises, or a juridical person which is registered for VAT purposes in another member state, and so on, or in case of a new vehicle, any other customer, so also private persons. You remember probably vaguely that for new vehicles there was a special rule, the internal market rules. Number 3, the acquisition of the good by the customer subject to VAT taxation in another member state, so that acquisition tax is charged or is due, at least under the local law. And number 4, the customer in the sense of number 2, letters A or B, has notified to the entrepreneur who makes the delivery a VAT identification number which was issued to him by another member state and is valid. So these are the 4 conditions, and so we have to check if they are fulfilled here. So number 1, the e-bike goes from Germany to Spain. Yes, fulfilled. Number 2, the customer is a Spanish entrepreneur and acts as such and not as a private person. Number 3, the customer is also subject to acquisition tax in Spain. That can be assumed from our general knowledge. However, we are going to test it later just for the sake of completeness. And 6A1, number 4, the customer, that is something which we assume also used this VAT number during the transaction. So it's an inter-community delivery, so it's tax-free under 4, number 1B, and at least it's tax-free only if the recapitulative statement has been handed in correctly, so that the deliverer in Germany hands in an electronic document or an electronic form into a database by which is then communicated automatically to the Spanish authorities and informs them that a guy with the VAT identification number here bought something for a net price of 2,000. The tax base is exactly that, 2,000 euro, and that is the reason that recapitulative statement and the German tax return, where you also have to declare tax-free amounts, that you also write something about the tax base in case of a tax exemption. Tax rate and tax, forget about it, because there is no tax. Formality is the same as usual, and only peculiar aspect, that recapitulative statement, which has to be handed in. And another thing is in spite of the fact that this intra-community delivery for him is tax-free, keeps the right to deduct his own input tax for raw material or for other cost of the purchase of that e-bike. Yeah, so that's again with this transaction. For the sake of completeness, if you want to try and exercise how would it be treated on the other side, so by the hands of the customer in Spain, For him, we would have to taxability as intra-community acquisition, so number 5. For that, we would need an intra-community acquisition, and in the inland, naturally in the Spanish inland then. 1A number 1 is fulfilled because the good goes from Germany to Spain. Number 2 is fulfilled because the buyer here is an entrepreneur. Number 3 is fulfilled because the deliverer is not a small entrepreneur, but a regular tax entrepreneur. The place of acquisition determines itself under 3D sentence 1. That's where the good ends up in the end. That's Spain, so there the intra-community acquisition would be taxable. And so it's taxable in Spain under 1.1 number 5, or to be more precise, under the Spanish rule, which is the equivalent to 1.1 number 5. Tax exemption. There will be probably none because the tax exemptions for intra-community acquisition seem to be strongly harmonized. And our German 4b has no exception at all, which could come into question here. So probably there's also no tax exemption for Spaniards. The tax base is the net amount, that's 2,000 euro. And the tax rate and tax are according to Spanish rate for e-bikes. We don't know it. However, we don't care about it because, well, that has to be paid by the Spanish customer in Spain, and he will know. Taxpayer is the customer in Spain as the acquirer, 13A number 2. The tax point is determined according to Spanish law, or the rest too according to Spanish law. Peculiarities, probably none. And the Spanish customer can later deduct if he uses the e-bike for purposes of his entrepreneurial activities. The Spanish customer then can deduct the acquisition tax as input tax, again 13.1 number 3, and that would mean that's it. So that was again another case which shows you how a relatively simple case for an exam or things like that might look like. So you see, it's a massive routine work, and when you analyze the case constellation properly in the beginning, then the rest is really, in most cases, routine. You have naturally to be aware of risks, so whenever you write down one of these standard sentences, you have to check if that really is true in this case too. But most of it is then routine. That's, by the way, one of the reasons why we have so many of these cases. You should be well trained whenever you go on a job. Okay, so I've talked your ears off probably again. I'm not sorry for it. However, let's pretend I'm sorry. That would be polite. And what now really comes, honestly, that's I thank you for watching this video so patiently. Have a small break until the next one comes out, or if you watch it in 2 years, then the next one is probably out. Then just take a small break until you go and deal with the next one. Yeah, thanks and goodbye.